And just a reminder, we will be interviewing the On Semi CEO next week live from the Milken Conference in Beverly Hills as the close goes on the road for extended coverage of one of the biggest conferences in the world of business and finance. But we do want to get back to those earnings and bring in Danielle Shay, Vice President of Options at Simpler Trading. And Danielle, I do want to start off with the chip sector. We got a little bit of a taste of that this week, particularly with Qualcomm. We're going to get a lot of names in that space next week, and it kind of runs the gamut from kind of the more pure play AI data center companies to maybe the more sort of automotive industrial side of it. Give me a sense here of kind of what you expect, and let's just kind of start with AMD as a barometer.
Of course. So looking at the semiconductors, this is my favorite spot in the market right now for top investments, but also for trades due to the relative strength that we're seeing. And so, that being said, we have seen a historic rally, and especially in AMD. AMD traded from $190 a share all the way up into $360. Now, I love AMD. I'm bullish on AMD. AMD historically does beat earnings. However, what you'll notice is that AMD also historically gaps down after earnings. So what I'm telling our traders is that I don't want to be too aggressive going into this earnings report because it historically gaps down and because it's been on a massive run. So I would like to buy a pullback in this name for a rally into 400.
I am curious, though, about ARM. Obviously, not a U.S. company, but they have ADRs that trade here in the U.S. And it's kind of an important barometer, given, as a chip designer and kind of at the central sort of location for everything going on right now out there here. I mean, what do you think investors' reaction would be to any sort of upside surprise when it comes to not just the past quarter, but any guidance that they may give?
Guidance is absolutely critical here, especially after the rally that we've already seen. When you look at ARM's been consolidating for so long and finally has broken out of this consolidation. So we're starting to see that momentum and volume picking up. Buyers are coming in, getting much more interested in the name after trading flat for quite some time. And so what I would like to see with this name is I would like to see earnings continue this breakout. I have an overhead price target of $250 a share in this name. But again, I will note that because of the rally that we've already seen, don't be surprised if it pulls back after the report, but that would only give us a better pullback buy entry.
There's one company I've been keeping an eye on, and I didn't mention it at the top, and that's Palantir. It had been on fire for quite a while. It's actually pulled back pretty significantly to start the year. I think it's down like 18 or 19%. I'm just looking right now at the implied one-day move on their earnings, about 8.5% or so. Is there any sense here that traders, particularly on the retail side, do they still see this as a major play anymore?
I personally see it as a major play. However, I don't like the earnings reversal that we've seen. We saw Palantir fall pretty substantially going into earnings last quarter and after last quarter as well, and that has placed it into a downtrend. So what we need to see from Palantir this quarter is a positive beat and positive guidance, and that could potentially break us out of this downtrend. If we can break out of this downtrend, that would equal a great buy spot for Palantir. However, I will caution traders that if this report isn't strong enough, we may end up seeing new lows, which obviously wouldn't be very positive, even though I still continue to like the name as a long-term hold.
Are you finding folks, particularly in the options market, as they sort of parse the AI, the broader AI, tech trade, whatever we want to call it here, are they doing that more at the single stock level, or are they sort of looking at, the stocks or the NDX or one of the sort of broader indices to make bets on, what the next direction might be?
So at Simpler Trading, I always personally start off with the overall index and the ETF. I do trade a lot of SMH. I also hold it as one of my top positions in my long-term portfolios. But then what I like to do is I like to look for the overall trend in the index and ETF and then trade the top tickers within that space. So for example, right now, NVIDIA and Broadcom both have earnings coming up in a couple of weeks. And so that provides for me an entry point for a rally going into earnings because the overall ETF is strong. So it's really a combination of both. We see a lot of traders that prefer to trade the individual names, but I personally like to trade both, and I like to do my underlying analysis specifically on the index and the ETF first.
All right, Danielle, got to leave it there. Great stuff. Danielle Shay, Vice President of Options over at Simpler Trading. A look at just a few other earnings. We're going to get about 100 S&P companies next week.